The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a beautiful November 20th at the headquarters of Technical Trading and Investing, TFNN. We're having a little bit of reaction, not a huge one, to the Fed and them coming out with their minutes. And if I can describe it, look through it fairly quickly, it really looks like everybody has an opinion and nobody could come up with the same thing. But it is looking much more likely that the May tapering date that most people have been talking about next year is probably really in January. Even if it's just $1 billion, it looks to me like they are really watching the stock market and watching stocks balloon to unsustainable levels, and they know they are the cause of it. It certainly looks like they don't have a consensus of how they extract themselves out of this, and I suspect that we're going to be waiting probably into January for Janet Yellen. I think our friend Ben Bernanke is more than willing just to let this sit on the shelf, and he can exit stage left without being blamed for anything bad happening because of any kind of minute change in policy. But it overwhelmingly looks like we're talking less than 3 meetings and more probably 2 meetings into a taper of at least some level. We talked a little bit about some of the other things going on, mostly the phony job numbers and the reports out for it yesterday. Bernanke talked about that last night. We're going to get into that in a little bit. But right now we're looking at a market pretty much flat on the S&P. Let me update all my stuff here because this market is kind of moving rather quickly. So let's take a look at it. Yeah, we're off of $1.26 at the moment at 2:08 Eastern Time. Not a real surprise. This market has been rather weak. The volume up this morning had been very weak until probably 1 o'clock. And very light, not uncommon for waiting for news, but it is going to be an interesting move. It certainly looks like we're going to be down. I suspect the numbers coming out of Black Friday, oh, I can't say that anymore. I got to say Racist Friday is going to be somewhat weak. Of course, we're going to be about 5 days short because of the way the calendar sits. So most people are looking for a weaker Christmas than last. And of course, they'll look at the gross numbers and won't count that it's 5 days late. It really doesn't matter, does it? If they made $1 billion last year, a company made $1 billion last year, and they make $900 million this year, that's all that matters. But we're already starting to see the cracks in the margin story for Christmas and a lot of these retailers. We'll talk about that later in the show today. We always like to start the show off, except when the Fed boots into the middle of my show, about historical events. And today, in 1991, in stock market and in financial history, a company called Cascade International was a fashion chain near the top of the Business Week's 1990 list of hot growth companies. Announced that its chairman, Victor Incendi, had disappeared along with more than 200 of Cascade stores that never really existed. Incendi had claimed that Cascade had between 255 and 400 outlets, but in reality there were fewer than 3, and nobody from the investment staff of any of these large firms actually went out and looked at one of them. But he did have 3 as shills. It was all phony. When the proverbial excrement hit the fan, he was nowhere to be found. And 22 years later, still has not been found. There have been reports that he was seen in the land that spawned the, what was the name of that movie now? Casablanca. And he's supposedly been seen in a few other territories that have no extradition from the United States. He is still one of the most wanted by the U.S. Marshals. Victor, I don't even know how to say it, Gyozi Incendry. He was born in Hungary. But quite the con man. His wife was trying to get out of the country and join him, and she got caught, spent 7 years at least. I don't know. Trying to find any kind of information before the Internet in 1995 and before Google in 1999 seems somewhat spotty. So if you were an axe murderer, you probably wanted to do it before probably Google really took off and saved every bit of everything off the Internet. Certainly this guy did. I found a few news articles about it. Kind of vaguely remember it being reported. But one of the few that truly got away with it, or at least for 20 years. He was old enough that he may not even be around anymore. Of course, he didn't really come back to save his wife. So I'm pretty sure she's not very happy about the whole deal, but still in jail, or it's hard to tell. But just remember that we always need to be wary about it. But this case was one of the first cases that the SEC really started working on additional documentation for businesses, and it is kind of one of the poster child of those early 1990 companies, especially when they're claiming that they have locations. The SEC actually does start calling them and making sure that you actually are there. A few more things wouldn't take a lot of time to actually find out, and of course the local broker-dealer here in Tampa had a lot of egg on its face because it was the one out there telling everybody just how hot this stock was. And even then, in 1992, they had to pay $13 million back to investors, which was a drop in the bucket for what was lost, which I think is about $200 million. He was also able to actually sell all that stock in about 1 month right before everything went belly up. And, of course, there's a lot more controls now on insider selling because of it. So kind of a famous case out there. But we'll get into the market out here. Well, every time we talk about Ben, we've got to play his theme song. It's just part of it, so let's get with it. Most people don't know Ben was a famous runway model before he became Fed president. There he is. He's going up and down. If you're watching video, there he is. He's spinning, showing off his latest three-piece suit. Okay, I think I've had enough of Ben's theme song. Anyway, old Ben, after seeing the news last night that most of the job numbers were phony, gave a speech and basically said, you know what, job numbers mean nothing. And I think they probably knew that already. I imagine the heads up, but really when the reporter came out with the news late Monday night, that the Census Bureau had basically been lying their ass off about all the job numbers right up through the election, and no one really knows now what the true job numbers are. The gentleman that wrote the article tried to give them to the census, all the notes that he had and all the original documents to the Census Bureau, but they would not take them. He said he was headed over to the House to see whether or not they wanted to start an investigation. But anyway, I think probably if you read the documentation or the speech from last night that he gave, it was very noticeable that the last two paragraphs were just tacked on at the last minute about the whole issue about we really don't care about jobs. We'll taper when we want to. And as far as leaving the interest rates low, we're going to leave them low forever. But probably the whole jobs number, we're not going to pay any attention to it anymore. So I don't know how many people have picked up on that already, or how many people have talked about it on CNBC or the rest of them. But if you read that speech last night, if you read the headlines of the minutes today, jobs don't matter anymore. They're going to hold interest rates low forever and ever and ever. Amen. And it's more about tapering. They really do not, some of the other notes I'm reading here about the minutes, they really don't see that they're getting any bang for the buck for the tapering, and they want to be out of the tapering well within next year, and want to start as soon as possible getting the at least stock market ready for tapering. Now, I'm sure everybody will come on and say they're not going to taper, they're not going to taper, they're not going to taper. Who knows if we can believe the minutes, but if you believe the minutes, they're going to taper within the next 2 to 3 meetings. So just keep on that path. And, of course, as always, the Federal Reserve System says keep calm. We will always print more money. What else do we have? Been looking at the market out here, and really been pushing the summation index. It works extremely well where we're at big inflection parts in the market. One of the things, especially if you're a newer trader and you want to stay on the right side of the market, the easiest thing to do is trade in the direction of the summation index. We've talked about making and writing automated software programs, and I've never found one that had a better correlation with profit than only trading in the direction of the summation index, not the actual S&P indexes or the Dow or the NASDAQ, but the actual NYSE summation index, which is a rolling oscillator of 2,750 stocks, I think, maybe 2,800 stocks now, on the NYSE. This is just whether or not they closed higher or lower. It has no amplitude. It has no volume behind it, so you really can't see. So you want to put this together with the volumes in the market and the volume trends of the market. We've been pushing higher and higher and higher here, and of course, very little or no volume as we get up very close to the S&P 500. What we do know, though, is for the majority of stocks, they are closing lower. If you're talking about the S&P 500, they're closing about the same. And, of course, over the last month, we've seen a huge move in the Dow. And it, of course, is the smallest of all indexes. It is also about 95, 97% institutionally owned. There are very few stocks and shares of stocks that are not owned by every big fund in the world out there. Very few shares of those stocks in the Dow are owned by individuals. They're almost all owned by either an ETF or a hedge fund or a big broker-dealer in that. So anyway, we're going to be back in just a few minutes. You can give me a call at 877-927-6648. That's 877-927-6648. And anybody that watched that video, math video, I've sent out a lot of links to it. Let me know what you thought. Either typing it in or call in.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And then we were talking a little, I guess one person's talking about the video I referred to in the show yesterday. And one of the things I just wish someone would have given it to me back then. But basically, she explains mathematics as all just fancy counting. And I would have loved to have that instead of, we'll just memorize it until maybe you get the whole concept. But one of the things I like about when I find someone that can explain something like that is what Einstein said. And he said, there's several versions of this, but basically he said, if you can't explain it to an 8-year-old, then you probably don't know it well enough. If you know it well enough, you'd be able to explain it to an 8 or 10 or 12-year-old. I've seen multiple versions of it, and it says if you can't explain it simply, you don't understand it well enough, which is another one of his ideas. He always loved putting ideas like relativity into visual descriptions, so basically anybody could understand it. And hopefully I'm explaining all the stuff that I believe that simply. Probably not, but on the whole, I hope I am. One of the charts we're showing here, I spent probably half the show or more on Monday talking about a bubble. It was quite clear that we're going to see a lot of these bubbles burst. We talked about yesterday about being in the 3D space. I'm still short there. But one of the easy ways to look at Bitcoin and see that you had a high of somewhere around $900 and a low of about $450 in the last 48 hours. Pretty volatile thing to know whether or not your dollar's worth $1 or 50 cents or $2 all in 24 or 48 or 96 hours. I don't follow it. I don't have any Bitcoins. My guess was that when this thing went ballistic that you'd never be able to get your money out. Apparently some people still are, but one of these things where everybody is brilliant at the top. And, of course, I think we can see a great deal of the risk mentality in the stock market, certainly in something like Bitcoin. Of course, I suspect that most of this was the huge move precipitated by the U.S. government taking their retailer that was responsible for somewhere between 80 and 90% of all sales offline. Suddenly, there was nowhere for this money to go and exchange, and suddenly there was a liquidity dry up. Who knows how many of those coins that the government has. But I suspect now that what we have is probably a market where maybe half or a fourth of the actual coins were in the market, and it just caused a movement for people wanting to get in, and very few coins out there for sale. So who knows? For all I know, the government spiked this whole thing up and is going to use the profits to pay the national debt off. Of course, they only made 21 million coins, or they're only going to be 21 million coins, so probably not really a drop in a bucket, just me being a jerk, I guess. ECB also had some very negative news. They are talking about negative deposit rates. And what are negative deposit rates? You put $100 in the bank, and, of course, you come back in a year, they're going to give you back 99. They're going to charge you to let your money sit in there. Probably a good time to start investing in mattresses or holes in the backyard. It's going to look like a gopher in my backyard if they ever do that. Anyway, one of the things, there are several countries that have already tried it, like Sweden and some of the other very far northwest countries of Europe. And they actually, there's a problem with them actually being zero. They actually had to make the rate negative 1/2 of a point so that they could actually get it to negative 0.25. When you think about it, it almost makes your head hurt because you are looking at negative lines, but it is that. You can give me a call at 877-927-6648. That's 877-927-6648, and we'll look at it. Talked about just about anything out here. I'm going to update, see how this market is moving for us over the last few minutes. Still off a point, I'm showing, and still under 2 billion shares. So yet another drive to the top, 1796. Maybe light volume again today would be fairly bearish. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
We've been talking a little bit about blow-off tops and three-gap plays and a lot of these other chart patterns that don't occur very often. I guess I was lucky to get started in 1998 and probably, like they say in China, there's the curse, which is may you live in interesting times. And of course, I was thrown right into the pit of the huge October Black was it Black Tuesday, Black Friday, caused by the bond implosion and long-term capital management. But I had to learn fairly quickly, and of course we went right out of the frying pan right into the fire with the dot-com bubble. And I, being a fairly new trader, only a couple of years, as far as I knew, this is the way it was always going to be. And these kind of huge blow-off tops were everywhere to be seen for the next 2 years. In fact, it was, 4 months after long-term capital management that we started seeing the huge moves, the first few huge moves in the dot-com bubble. probably also brought on by a lot of the action by the Fed. And I think we're seeing that same thing now. Just so people remember, we were talking about me being short several of the stocks out here. We basically had been talking for about 6 or 9 months about shorting Netflix when it had its third big gap. We did that. And of course, that thing went from $390 down to $325 in one day. These huge patterns do not present themselves all the time. If you scan for them, you're going to finally give up. They do happen in very frothy markets, which we have now. So if you go back and look at again today, these 3D stocks, PRLB is off 5%, SSYS is off 6%, X1, which I am short, is off almost 10%, and DDD is off 7%. And VoxelJet, which I'm short, is off 21%. So we're seeing some absolute massive moves. And, of course, I think VoxelJet closed down, 15 or 17% yesterday. But it is some of these charts are absolutely textbook. Like I said on Netflix, you want to look at those charts. You want to look at these charts. One of the reasons that I came to TFNN was that I made a great deal of money finding the top on the May 5th high in all the housing stocks. I look at a ton of charts all the time. Every single one of those charts was screaming about the top in the housing market on that May 5th date. And, of course, by the end of the summer, Lehman Brothers was out of business. At the same point, I made a absolute god-awful amount of money in the March 2009 lows. What I found out is that you can either be swinging for the fences or you can actually try to ground out a single every day. I know that I'm going to take a lot more flack from people because I'm not going to always be right, but I'm going to make a hell of a lot more money in the long term by being wrong a lot more than most people can stand. My thinking had a huge change when I read a book called Fooled by Randomness by Nassim Taleb. Here's a guy that is wrong probably 4 or 5 years in a row a lot of times. And worth $3.5 billion now. He started off being wrong for a host of big names on Wall Street, but made a couple of big bets in the 87 destruction in 87, and actually was able to go on his own from then on. He's had a hedge fund forever out of Chicago. He doesn't even show up anymore. His computers pretty much run everything. Basically, he bets on 100-year floods coming every 30 years. And since most people are horrible at statistics, knows that that's exactly what's happening. What you can do is look for what are called outliers. And what we're going to see when we look at these charts is that. And especially if you look at these charts on when they get to these levels, you're going to see it almost always in the intraday chart. Even the dailies are going to look kind of ugly. But there's a little bit of trading these blow-off tops that only can be done by decent tape reading. And I've only found one book that really talked about reading a tape. And I'm not talking about looking at 5-minute chart bars or 1-minute chart bars. I mean physically watching the time and sales go by. This is almost a forgotten art. And if I wouldn't have done it early on in my career, I probably would have never picked it up. But I was lucky enough to have a lot of people, some on TFNN, that were more than willing to tell us, like several people we have here that have 20 or 30 years of experience of it. I'm going to talk about that book in a few minutes. But there's a lot of disagreement on exactly how to read blow-off tops. But if you're looking for a great primer of what to look for. Go no farther than these 3D stocks starting on Monday morning. One of the ones that I made a ton of money on in the past, I'll always remember it, was Ryland Homes. At one point, it went from it was trading like 2 million shares a day. And I think it was trading around $71 in the morning, and had about 500,000 shares, maybe 1030 or something. So I shorted 100 shares. It looked awful weak. Went up $1. So I dropped another 100 shares on it. Went up another $1. But the reason I kept shorting was because the thing was going up, and actually did by the end of the day go up $8 on 100,000 shares. And you could just tell that the market maker was jacking with everybody. And that's how you really notice it. Almost no volume, and the market keeps moving up. Almost no volume, and the market keeps moving up. You can put in a 100-share order, and they'll take it, and then they'll run up another 50 cents. And again, there'll be almost no volume. There may be 50 shares to your 100 shares, and they just keep moving up. What normally happens at the very end of all these huge blow-off tops is the shorts lose the will to short. And that's exactly what happens. And as it moves up, all they're doing is having the most weak of shorts cover. And that's what happens. You see 150, a lot of short and small orders roll through the tape during the day, and a pretty good indication. But you, of course, need to be watching these stocks on how they normally trade during the day to really see it. But normally what you're going to see is the weakest of the shorts, which are almost always small orders, 50, 100, 200 shares, something like that, slowly roll through all of them, and not a lot of people buying. What you really see is just the next tick up, and someone covers. You see the next tick up, and someone covers. And of course, back then, we were trading in eighths, a lot easier to see than it is today. So I'm going to tell you that. It's not getting easier. It's getting a little harder. But if you would have watched the move in DDD or the move in VoxelJet over the last, 24 trading hours, last couple of 2 or 3 days. Very good time to sit down there and watch time and sales, which you can go to the NASDAQ and even get the time and sales, and so you can see them during the day, even for NYSE stocks. But an interesting thing to look at, we're not going to get into too many charts out here today, but blow-off tops are generally that. They are the last squeal of the people that just can't quit shorting. And, of course, they get stopped out, and it gets to some unsustainable level, but it's all with small orders for the most part. It is somebody back there running every short they can because they know the stock is going to blow off, and it's it. And normally there is some big operator behind every one of these, and that's why you can see the rapid move that you see in all these stocks on Monday, only to close lower by the end of the day. It becomes self-sustaining. Well, not self-sustaining, but a lot of, if you're going to make a lot of money quickly, these some of the patterns that you want to be looking at. I tried to get some, because I got a lot of emails about this over the last few days, wanted to get maybe the best writing out there on blow-off tops, but I think that they're so infrequently happening that there isn't a whole lot out there. So maybe the best description of trading blow-off tops may just be to dig into these charts that we see, especially in 3D. But the stuff I did find on the web, guess what? All the articles about blow-off tops, 2007, 2008. And then I go back and Google more of them, 2001. So these do tend to be in markets that are incredibly bubbly, just like those 3 gap plays that we saw in Netflix out there. But this is telling us a great deal about what's happening in this market. But I think I'm short VoxelJet at what was it, $67 or something? So about $22 2 days later. Not a bad move, and of course another 21% move down today. Just like Netflix, these are not things that are going to happen every day, so don't ask to subscribe to my newsletter and get them all the time. But I've been around long enough now to see these patterns come 2 or 3 times, and now if you're only here for the first time, maybe you'll see them the second time, and by the third time, you too can make a bunch of money off these. There's a great deal of psychology at work in moves like this, and it impacts those on both sides of the trade. Buyers see the gains stack up, and they can't sell. They are mesmerized, almost like hypnotized, and quickly join in the chase. So you have a lot of longs. These tend to also be very short. Not short, but low volume participants, 100, 200 shares, and they tend to sit on these things all the way back. Those who want to fade the move and short sell into the strength quickly get squeezed out, watching their losses mount rapidly, and panic sets in, and that's what we see on Monday in these, and that was the panic in the shorts and the intraday move, only to close lower by the end of the day. For those that are more set in the mathematical realm, you can actually Google the sand pile effect. It's actually got a name of 2 scientists that went back into it. But a great deal of the money made on Wall Street today is made by physicists. These guys come in and start programming at $400,000, $450,000 a year for high-frequency trading systems. A lot of what they do on the downside is just that. It's called the sand pile effect, mostly because of the models set up by the 2 scientists that caused this. I think it's called a bang and something else. But I've read through it, and basically it's this. They do a lot of tests with sand. Just like an hourglass. If you ever watched the sand come down, sometimes there's just little tiny pullbacks. There's just tiny little avalanches. But sometimes you see that there's a huge avalanche, and it rolls all the way back down to the bottom of the hourglass. And what we're looking for is the kind of stress that you see in those huge moves. And a lot of what the people that make $450 a year on Wall Street programming is looking for actual opportunities like this to drop a lot of sand on top of it. But of course, as soon as you start seeing a few of the sand grains on the top roll down the side, it starts cascading like a giant snowball coming down, and you just can't stop, especially in lightly traded stocks like VoxelJet or X1. These things don't have a lot of shares out there, and when the tide turns, the exits are very extremely narrow, and pretty much the equivalent of someone yelling fire in a crowded theater. Those exits are thin, and it is not easy to get out. Vernon L. Smith, I didn't finish this slide, I guess, before the beginning of the show. We've talked about him. He won the 2002 Nobel Prize for economics. The difference between him and every other loser economic weenie that I've ever seen, which I pretty much would not pay attention to. Luckily enough, I read something from somewhere else that pointed me to Vernon L. Smith. But basically, he was the first guy to actually put real traders and unexperienced traders together in a marketplace. And what he showed was that pretty much if you told everybody that the market closed at 6, only what they had in their market bank account at 6 o'clock would be theirs. The trading was totally over, that they trade to 5:59, and by then the market would crash anyway. So you might check him out. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, as I promised, I was going to get into the book that I read that probably started me off in tape reading. Again, this is an acquired knowledge. It's not something I think anybody can teach somebody in one day. It is, I'll show you the Amazon page in a minute, but it's called Studies in Tape Reading. It was written in 1910 when they did have nothing but ticker tape. It was written by Richard Wyckoff, and for those people that don't know that name, he was the patron saint of price and volume trading. He sat around with a lot of people, including people like Jesse Livermore, and every big name like J.P. Morgan looked over the shoulders of Jesse Livermore, all the other big traders, probably into the 1930s. I think he died in early 1930s. He had a magazine called Ticker Tape, which became later known as the Magazine of Wall Street, and later on the Wall Street Journal. So it goes back to that. I was able to get some of his early writings, but he had an office in Wall Street, and a lot of people would come in and pitch a lot of the ideas they had for trading. He also talked to a lot of these other folks, but most of his stuff in here from reading ticker tapes is directly from Jesse Livermore. He learned from him, and most of the stuff in there, well worth it. I think I bought my copy paperback for like $10. Of course, it's long been out of copyright, so you can find second people. But granted, there isn't a whole lot in there. But it is probably the start of an adventure of getting into ticker tape reading. Of course, a lot tougher today with high-frequency trading systems out there, but still extreme cases like we saw on Monday of blow-off tops, not a bad thing to know, and it takes a little while to know. Actually, one of my first jobs was working in a very high-end audio, video, and computer store. I ran the computer side of it, but was very lucky to be able to go over and listen to $4,000 and $5,000 and $10,000 audio systems and everything else. One of the things we did have is early in the time frame, there was no standard radio. Everybody had to spend a lot of time modifying and working to fit a AM/FM cassette and then later a CD into the dash of a car. It's not like today where everybody has a kit and everything fits perfectly and takes 5, 10, 15 minutes. But what they would do is anybody that wanted to sell car stereos, they put them back in the install bay for an entire year. If they lasted the year, then they would bring them out and put them on the sales floor. They, after being back there in a year, they knew exactly what radio heads would fit in every car. There was no way to teach that to somebody. It was acquired knowledge. And much like that acquired knowledge that you just have to take the time to learn, tape reading is that. But if you want to get started, this was my introduction to learning tape reading, well worth the money, and over a century old, pretty much has the same thing, newer, faster, and of course high-frequency traders, but still bringing in a lot of what we know. And of course, you're going to have, they say it in flying. Flying is hours and hours of boredom separated by seconds of sheer terror. It is, if you want to make a lot of money fast in the stock market, it is being able to work and know what to do when everything in your gut tells you elsewise, but because you've either experienced it or you've thought about it before. So if you think I was nuts for shorting these stocks, I would probably have agreed with you if I hadn't been through this and down this 20 times before. But that's what simulators are for. You don't always have to be trading real money, and sometimes you have to go through these things for a few times before you learn. But there's certainly a way to do that. Anyway, I want to thank you for being with me again today, and we'll see you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.